What if I told you that the next major move in XRP could be decided not just by charts, but by politics, regulation, and one key decision coming out of Washington? What if the calm we are seeing in the market right now is simply the quiet before something much bigger? Ladies and gentlemen, welcome back to We Are Cosmic, your home for intelligent, strategic, and calm crypto analysis. If you are serious about cryptocurrency, especially XRP, and you want clear thinking instead of emotional noise, you are in the right place. Right now, the market feels strange. It is not crashing. It is not exploding. It is just moving sideways, slightly green, slightly up, but nothing dramatic. And this is exactly the kind of environment where most investors become impatient. They start questioning their decisions. They start doubting their strategy. They start wondering if they made a mistake entering crypto in the first place. But experienced investors understand something very important. Markets move in cycles, and boredom is often part of accumulation phases. Today, we are watching something bigger than just price action. We are watching political developments, regulation updates, and especially the progress of the Clarity Act. According to Brad Garlinghouse, the CEO of Ripple, there is a strong probability, somewhere around 80 to 90%, that Congress could pass meaningful crypto clarity soon. If that happens, it could fundamentally change how institutions approach XRP and the broader crypto market in the United States. And when regulation becomes clear, capital tends to flow. At the same time, we are seeing major political headlines. Former President Donald J. Trump continues to dominate discussions around crypto policy. Many people believe he represents a more crypto-friendly stance compared to previous administrations. Whether you support him or not is irrelevant from an investment perspective. What matters is understanding how political leadership impacts regulation and how regulation impacts institutional adoption. There are also side stories that reflect how far the industry has come. For example, Sam Bankman-Fried, the former CEO of FTX, reportedly seeking a presidential pardon. That alone shows how intense and serious the last crypto cycle was. We witnessed one of the biggest collapses in financial history. Billions were lost, trust was damaged, but the market survived, and survival is strength. Now let's talk directly about XRP. Many of you are asking, what should we do? The price has been hovering. Some of you are bullish, some of you are tired, some are frustrated. That is normal. Fear always increases when prices drop below psychological levels like $1. And if XRP were to revisit sub $1 territory, that would test conviction even more. Here's the professional perspective. Volatility creates opportunity. Most people buy when prices are high and headlines are positive. Very few buy when prices are red and sentiment is negative. Yet historically, wealth in crypto has been built during fear, not hype. That does not mean reckless buying. It means strategic accumulation with risk management. In airports, in offices, in regular daily life, if you ask random people whether they own Bitcoin or XRP, most will say no. Mass adoption is still early. The average person is still asking, is Bitcoin a scam? That tells you something powerful. We are not at peak euphoria. We are still in the education phase. And that is why We Are Cosmic exists. We are here to think long term. We are here to analyze without panic. We are here to build conviction based on information, not emotion. Crypto is not just about price. It is about positioning before clarity arrives. It is about understanding cycles. And most importantly, it is about protecting your health and your mindset during volatility. Let us now move into the most important topic shaping the current market mood, regulation, specifically the Clarity Act. Right now, XRP is not struggling because of technology. It is not struggling because of adoption. It is not struggling because it lacks use case. The biggest weight on XRP for the past few years has been regulatory uncertainty in the United States. When Brad Garlinghouse, the CEO of Ripple, says there is an 80-90% chance that regulatory clarity could move forward soon, that is not just a random statement. That is strategic communication. Ripple has been fighting the regulatory battle longer than almost any major crypto company in the US. The lawsuit with the SEC changed everything for XRP holders. It froze institutional momentum. It created fear. It slowed adoption inside the United States. But here is what most people miss. While the US was uncertain, Ripple expanded globally. They built partnerships in Asia, the Middle East, and Europe. They positioned XRP not just as a speculative asset, but as a bridge asset for cross-border payments. The technology kept moving forward even while the legal battle was ongoing. Now imagine this scenario. If Congress passes a clear regulatory framework through something like the Clarity Act, institutions that were previously waiting on the sidelines may finally have legal confidence to enter. Banks do not move based on hype. They move based on legal certainty. Pension funds do not invest based on Twitter sentiment. They invest when compliance departments say the risk is manageable. This is why the market feels stuck. Big money is watching Washington. And here's the psychological trap. Retail investors get bored before institutions move. They sell during sideways action. They lose patience during consolidation. Then, when clarity finally comes and volume explodes, they re-enter at higher prices. That cycle has repeated again and again in crypto history. Let us also be realistic. There is still risk. Even if the Clarity Act has high probability, nothing is guaranteed in politics. Bills get delayed, amendments get added, voting timelines shift. If it does not pass in the expected window, we could see disappointment selling. Markets price in expectations before outcomes happen. If expectations are not met, volatility follows. That is why strategy matters more than emotion. Now let us zoom out even further. Regulation is not just about XRP, it is about the entire crypto market structure. It is about defining what is a security, what is a commodity, how exchanges must operate, how custody works, how stablecoins are regulated, and how taxation is applied. When those rules become clear, it reduces uncertainty premium. And uncertainty premium is what keeps institutional capital cautious. We also need to talk about political influence. Figures like Donald J. Trump being openly discussed as crypto-friendly candidates adds another layer to market expectations. Whether he returns to office or not, the broader political shift toward recognizing crypto as a legitimate financial sector is becoming more visible. Years ago, politicians ignored crypto. Now they campaign around it. That alone shows industry maturity. But here is the balanced view. Regulation is not automatically bullish in the short term. Sometimes regulation tightens leverage, reduces speculation, and forces weak players out. However, in the long term, clear rules create sustainable growth. Think about traditional stock markets. They grew because investors trusted the framework. For XRP specifically, clarity could remove one of the biggest narrative risks that has followed it for years. Many investors avoided XRP not because they doubted its utility, but because they feared regulatory classification issues. Remove that fear and the narrative shifts. However, do not confuse potential with certainty. Price action depends on liquidity, macroeconomic conditions, interest rates, and overall risk appetite. Even with positive regulation, if global liquidity tightens, crypto can still struggle temporarily. This is why buying the dip must be strategic, not emotional. If XRP revisits key psychological levels like $1 or below, that does not automatically mean panic. It means reassessment. Are fundamentals broken, or is it simply market structure? Strong investors ask that question calmly. Now that we've talked about regulation and the Clarity Act, let's shift gears and discuss something equally important: market psychology. Because in crypto, often the biggest gains are not made from technical charts alone, but from understanding human behavior, emotion, and timing. This is where concepts like fear, greed, and patience become your most powerful tools. Right now, many investors are frustrated. Prices aren't soaring, sideways action is boring, and the FOMO of the last bull run is long gone. That boredom and impatience is normal. It's human nature to want quick rewards. But if you step back, you'll see that sideways or slightly down, markets are actually opportunities. They are periods where strong hands accumulate while weaker hands exit. That's the reality of cycles. Let's take XRP as an example. Some investors panic when the price drops near $1. They think, oh no, it's going to zero, or I should sell now. But historically, the biggest gains in crypto were achieved when investors bought in moments of fear, not hype. Fear creates discounted opportunities. That is why understanding your own psychology and controlling impulsive reactions is crucial. Diamond hands are not just a meme, they are a mindset. So what does diamond hands really mean? It doesn't mean blind holding with no strategy. It means holding when the fundamentals are intact and risks are understood. For XRP, the fundamentals remain strong. Real-world adoption, cross-border payment use cases, and global partnerships continue to grow. The regulatory situation is approaching clarity. The technology is proven. That is a strong foundation. So if you choose to hold or even buy more during dips, you are aligning with fundamentals, not speculation alone. Next, let's talk about buying the dip. This is a strategy, not a gamble. If XRP falls below key levels, such as the $1 mark, it can trigger buying opportunities. Experienced investors don't panic sell. They look at support levels, assess risk, and scale in. This is smart, calculated accumulation. You don't go all in blindly, you use defined amounts to manage risk. The market will move. Sometimes it spikes, sometimes it drops further. Your goal is consistency over time, not trying to time every swing perfectly. The psychology behind this strategy is also powerful. When retail investors see panic, they sell. Institutions see opportunity. They have patience, legal guidance, and strategy. Retail investors can learn from that. It's a lesson in emotional intelligence. In fact, one of the most common mistakes in crypto is letting emotion drive decisions. Fear and greed are always present, but the key is to recognize them and act rationally. Diamond hands also involve perspective. It's about understanding that crypto is not a short-term lottery. It is a long-term growth story. Yes, volatility exists. Yes, markets can manipulate prices temporarily. But by focusing on the bigger picture, adoption, regulation, technology, you develop conviction. Conviction allows you to navigate turbulent markets without selling at the wrong time. It is mental discipline paired with strategic insight. Another important psychological factor is community. We Are Cosmic is not just a channel, it is a learning hub. When you engage with like-minded investors, share analysis, and discuss strategies, you strengthen your decision-making. Emotional reinforcement from strong communities helps resist panic. It's one reason why active crypto communities outperform isolated investors in behavioral consistency. Finally, let's address the balance between holding and life. You cannot invest from panic or emotional exhaustion. Health and mental clarity are part of financial strategy. If you are stressed, distracted, or chasing FOMO, you will make mistakes. Crypto requires focus, patience, and discipline. It's a marathon, not a sprint. Now that we've covered psychology and strategic holding, it's time to get tactical. Every serious crypto investor needs to understand the numbers, support levels, resistance points, and potential triggers for price movement. This is where strategy meets data, and for XRP, Ethereum, and Bitcoin, these levels are crucial. Starting with XRP, one of the most watched levels is $1. Psychologically and technically, this is a major floor. Historically, XRP has found support around this mark during market corrections. If it dips below $1, it could trigger short-term panic selling, but for disciplined investors, it signals a potential buying opportunity. The key is not to rush blindly. Look at volume, market sentiment, and nearby support levels, like $0.85 and $0.75. These lower floors are where patient investors often accumulate. Buying in stages here is smarter than trying to time the absolute bottom. On the resistance side, XRP faces strong barriers around $1.50 to $1.60. This is where previous rallies stalled before corrections occurred. If XRP breaks through these levels with high volume, it could signal the start of a meaningful uptrend, especially if positive news or regulatory clarity aligns with the move. Remember, resistance levels are not permanent walls. They are psychological points where sellers tend to emerge. When these walls break, the market often accelerates quickly. Ethereum, as always, has its own critical zones. Support around $1,500 to $1,600 is important. A drop below this range could lead to accelerated selling, but it also opens strategic entry points for long-term holders. Resistance near $2,000 to $2,100 is the next significant hurdle. If ETH surpasses that, we may see momentum-driven price action that pulls altcoins higher as well. Ethereum often leads in market sentiment for DeFi and smart contract exposure, so watching ETH closely gives clues for the broader market. Bitcoin remains the market's bellwether. Current support around $28,000 to $29,000 is critical. Falling below this range could create fear across the market. Conversely, breaking $32,000 to $33,000 resistance with strong volume can drive momentum into altcoins, including XRP and Ethereum. Bitcoin is the anchor. Its movement often dictates the short-term tone for other cryptocurrencies. Now, it's essential to combine these technical levels with external catalysts. XRP's price is not just about charts, it reacts to news, partnerships, and regulation. For example, the upcoming vote or progress on the Clarity Act is a potential catalyst that could push XRP above resistance levels quickly. Institutions, once assured of legal clarity, could inject significant liquidity, causing rapid upward movement. Timing and context matter just as much as the numbers. Another factor to watch is liquidity and volume. Even if a price breaks resistance, thin markets can lead to fake outs. That's why volume spikes, especially during news events, are significant. For example, if XRP breaks $1.50 with strong institutional volume, it's a higher probability of sustained upward movement. Weak volume, however, might only lead to short-lived spikes. It's also smart to observe correlations. XRP often reacts in tandem with Bitcoin and Ethereum, but sometimes diverges during XRP-specific news. If regulatory clarity favors XRP while BTC remains flat, XRP could outperform temporarily. Recognizing these divergence patterns can help identify strategic buying windows or early exits. Finally, patience remains key. Even with clear support and resistance levels, markets rarely move in straight lines. Short-term dips, sideways action, and corrections are part of the rhythm. Strategic investors understand that accumulating during dips, monitoring resistance for breakout confirmation, and staying disciplined is more effective than chasing momentum or reacting emotionally. Up to this point, we've covered regulation, psychology, and price levels. Now let's talk about what really separates XRP from many other cryptocurrencies: its real-world adoption and growing institutional footprint. This is where fundamentals meet strategy, and why understanding XRP's utility is critical for serious investors. First, consider the core purpose of XRP. Unlike some tokens that exist primarily as speculative assets, XRP is designed for cross-border payments. Financial institutions can move large amounts of money across borders in seconds with minimal fees, compared to traditional systems like SWIFT that can take days. This is not theoretical. It is already being used globally. Ripple's partnerships with banks and payment providers around the world mean that demand for XRP isn't just a hope, it is grounded in real transactional utility. Institutional adoption has been accelerating, especially outside the US. Countries in Asia, the Middle East, and Europe have welcomed Ripple's network because it solves a real problem: inefficiency in cross-border transfers. For example, smaller banks and remittance providers can use XRP as a bridge currency to reduce costs and speed up settlements. This creates natural demand for the token. When supply and demand fundamentals improve, prices often follow, sometimes in dramatic ways. Even within the United States, once the regulatory landscape clarifies, institutional adoption is likely to surge. Think about it. Large financial institutions, hedge funds, and corporate treasuries won't engage with XRP until they understand the legal framework. That's why the Clarity Act matters so much. If passed, it could unlock billions of dollars in institutional capital previously held back by uncertainty. This is the difference between XRP being a niche crypto and XRP becoming a widely adopted financial tool. Another aspect to consider is strategic partnerships. Ripple has consistently been forming alliances with banks, payment platforms, and fintech companies. Each partnership adds credibility and potential transactional volume. Unlike many altcoins, which rely on hype or speculative narratives, XRP's network effect grows with every new institutional partner. More partners mean more use cases, and more use cases mean more long-term demand for the token. Beyond banks, Ripple is targeting corporate treasury management, e-commerce remittances, and even emerging market payment systems. These are areas where traditional finance struggles. XRP is not just faster and cheaper, it offers predictable liquidity, which is crucial for businesses moving money internationally. When companies can rely on XRP for operational efficiency, the token's utility increases organically, independent of market speculation. It's also worth mentioning the psychological impact of institutional adoption. When retail investors see banks, payment providers, or major corporations using XRP, confidence grows. The narrative shifts from risky altcoin to practical financial tool. This psychological shift often precedes price movement. Retail and institutional participation together create a reinforcing cycle. Adoption drives confidence, which drives liquidity, which ultimately drives price. However, smart investors must maintain perspective. Real-world adoption does not mean instant price explosions. Liquidity, macroeconomic factors, and market sentiment still influence short-term movements. But over the medium to long term, adoption-driven demand provides a strong foundation. It reduces reliance on speculative hype and creates structural support for the market. In addition, XRP's low transaction costs and high-speed position it uniquely compared to Bitcoin or Ethereum for cross-border use. While BTC and ETH dominate as store of value or smart contract platforms, XRP addresses a specific unmet need: real-time, cost-effective global money transfers. This utility is increasingly recognized by the financial sector. Now that we've analyzed regulation, market psychology, price levels, and institutional adoption, it's time to put it all together into actionable strategies for XRP and the broader crypto market in 2026. This is where insight turns into execution and where disciplined planning separates successful investors from reactive traders. First, let's talk about positioning. With regulatory clarity on the horizon, XRP is uniquely poised for growth. The Clarity Act could remove one of the largest narrative risks, giving institutions the confidence to deploy capital. For investors, this means that now is the moment to evaluate your risk tolerance and scale in strategically. Buying in stages, especially during dips near key support levels like $1 for XRP, allows you to increase exposure without overcommitting. This is the difference between panic buying and calculated accumulation. Next, risk management cannot be overstated. Crypto is volatile, and even assets with strong fundamentals like XRP can experience sudden swings. Establish clear entry points, exit strategies, and position sizes. Decide in advance how much you are willing to allocate to potential short-term drops without touching funds needed for living expenses. Use the same discipline institutions use, never risk more than you can afford to lose, and keep liquidity ready to capitalize on opportunities when they appear. Timing is also critical. We have already discussed price levels and technical triggers. Combine this with news catalysts, regulatory updates, major partnership announcements, and macroeconomic trends. For example, a confirmation of progress on the Clarity Act or a new bank adoption announcement could trigger rapid upward movement. Being ready with allocated capital during these windows increases your chance of favorable entries. Diamond hands still matter, but now with nuance. Holding long-term is essential, but staying informed is equally crucial. Watch markets without letting emotions dominate. Volatility is your friend when approached strategically. It allows accumulation at lower prices and potential profit-taking near key resistance points. Keep your mind sharp, because crypto markets react faster than traditional finance. Diversification is another layer of safety. While XRP may be a central part of your strategy, consider exposure to complementary assets like Bitcoin and Ethereum. Each has its role. BTC as the market anchor, ETH for DeFi exposure, and XRP for utility in cross-border payments. A balanced portfolio reduces the psychological pressure of one asset's fluctuations and creates multiple pathways for potential gains. Community and information access also play a crucial role. Channels like We Are Cosmic are designed to provide timely analysis, clarity on news events, and insights into both technical and fundamental factors. Engaging with a community of disciplined investors reinforces rational decision-making. Sharing perspectives, asking questions, and verifying facts helps prevent impulsive moves driven by hype or fear. Finally, remember the long-term perspective. 2026 could be a year of accelerated adoption for XRP, not just retail hype. Global payments, corporate treasury management, and bank partnerships are growing steadily. By aligning strategy with fundamentals, monitoring key levels, and staying prepared for regulatory catalysts, you position yourself not as a short-term gambler, but as a strategic investor.